You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
And hello, good afternoon, everybody, or whenever you're actually listening to our show. This is the Option Block, your home for options wit, option wisdom, occasional umbrage, and unhappiness from the co-hosts. But mostly they're pretty happy-go-lucky people because they get to trade options every day. It is I, your sit-in host for Mark Longo, our intrepid the intrepid CEO of all things option-related and the Options Insider Radio Network. He is, guess, at another conference, sipping tall, frosty beverages and talking to the elite of the option industry. But while he is gone, it is I, Andrew, his co-host or sometime co-host or cohort for the option block. But luckily for me, I do have coming off the bench, actually, on injured reserve, we have Uncle Mike Tussaw from RCM Capital. How are you doing, Mr. Tussaw?
Not too bad, not too bad. And I thought we were the elite of the options industry, Andrew.
You know what? I think that's just what Longo tells us, so we keep doing the show.
That's probably it.
I had to think about that a little bit. He goes, where are my elite co-hosts? And, you know, we just, as lemmings, we just show up on the show twice a week. So he's a bit of a Pied Piper, that one. I just thought of that just now.
I'm starting to see how things work now.
And with the introductions over, we will move to the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
Welcome, everybody, to the trading block. This is where we talk about what's up, what's down, what's moving sideways, a little VIX, a little of everything. And I don't want to make Mike talk too loud, or too much, but oh my gosh, was today the most exciting day, or we can actually talk about the week a little bit, the most exciting day in options. Was the BBI very high or very low today, Mike? That's just really what I want to
know. Well, I have the flu, so I don't know if we want to get into the BBI on today. So that's another story. You walked right into that one.
That was easy. Buzzsaw.
It was. You know, today obviously wasn't quite as exciting as yesterday. The Fed raises interest rates and the market goes higher. I think it's one where a lot of people were expecting it, and markets like it when what they expect to happen happens. And the Fed raised rates like a lot of people thought they would, myself included, and I think pretty much everyone on the planet Earth for that matter. And so markets went up. Today, markets are pulling back a little bit, nothing too crazy. The thing that really caught my eye, not so much today, but yesterday, was the metals. My beloved precious metals, gold and silver, got a huge bump on a Fed increase. So I think that shows that a lot of the expectation, because gold and silver have been getting pummeled the last couple of weeks, a lot of the expectation had been built into the market, not just in the equities, but also in metals and bonds as well.
Yeah, I would agree. They had a little bit of a dead cat bounce, and I actually think I'm almost thinking that, especially with metals and treasuries and stuff like that, there was the possibility of more of an increase or something more aggressive. But I think the Yellen has set the tone for we're just going to keep kind of raising them a little bit at a time, a little bit at a time. Not going to do anything really drastic, and probably just wait for the rest of the world to catch up, because I'm pretty sure that the Europeans are still rolling along with the negative interest rate experiment that they got going on over there.
Yeah, I would
probably
agree.
And they're not really and it's not producing much. It's not like, the Eurozone is blowing the doors out on activity. As far as that goes, yeah, we got a good, and it seems like a characteristic of the market. I think the last big run we had was, Trump gave a speech. It wasn't crazy. Market rallied a lot the next day. I think there was low expectations on that one. Here, everybody might have been, or maybe thinking about there could be more rates, but there wasn't. It's just going to be sort of this, okay, we're going to raise a quarter point every quarter or whatever until we get back to some sort of normal interest rate environment. And then there was okay. The expectations were a little surprised. We'll rally some more. And I think also we had some Dutch elections. They leaned a little more right, but they're not really getting rid of, what they got going on there. So maybe a precursor to the French, who knows? I would guess the French probably don't want to get rid of what they got either. So anyway, although that could surprise, but that took, and the things I look at, volatility futures at prices that I thought would hard to hit, be very difficult to hit, but I see VIX down now around 1120. VIXMO, which is the old VIX calculation, as we move into next week, is in the 10s. All that says is just lower realized vol expected. The April future is 1330. I think last week at one point it was like 1460, 1470. So just as the things that I look at least, in the midterm, they're just not expecting a lot of volatility. That's the short answer for all that. I'm not expecting a lot of vol. Some of the things that could be a catalyst for vol disappeared, or they have reduced substantially. And even oil that looked like it was kind of going to jump into the dustbin for a while bounced this week as well. So you know what it is? It is a low vol market. We've had them before. 2005 and 2006. We had them in the mid 90s, where there just wasn't a lot of surprises on the horizon. So the moves in the big indexes just weren't that big. And I think another thing, we talked about it, or one of the things I've heard of is kind of this, we have this sort of constant sector rotation every day, where one day they like the banks, but they don't like oil. So net, the SPX doesn't do very much. Or they like technology and they don't like everything else. Net, the index doesn't do very much. So you have a lot of this sort of, I guess maybe it's because, how we always thought, how could Trump be a one single digit vol president? And I think that's because everybody just changes their mind about what sector might do well every day. First it was old school, and then it was kind of new technology, and then everybody switches again. And net, the SPX just kind of slowly grinds up. I don't know, Mike, what's your take on that?
Well, I think you're right. I mean, a lot of people believe that Trump is not a single digit VIX president by any means. But you bring up 2004, 2005. That was I always tell people how that was the golden age of the Iron Condor. I remember just traveling the country around that time, and everyone would just tell me how stupid I was that I wasn't doing condors every day. And of course, we know how that ended. A couple of years later, anyone who was doing condors was they're not doing condors anymore, most likely, to say the least. But the concern that I have with a low volatility, it does a lot of times last for a while, but it's seldom, it's never lasted forever. And so with that being said, a lot of times it does last, but it's never lasted forever. In terms of sector rotation, I mean, I could see that too. I mean, if you look at it today, for example, yesterday XLE was just up through the roof. It's down about 0.75% today, which isn't a lot by any means, but it's definitely down. XLF, the financials, they didn't even move yesterday on the big rally. And I would have thought that the financials would have definitely been one of the leaders in driving the markets higher on higher interest rates. So I think you're right. There is a lot of sector rotation going on right now, and it's kind of where it's at.
It is, and it's not really giving us much of a brew of, I'd say interesting things to look at. In general, when things are like this, I kind of lower my expectations for returns in general. I just say, well, there's just not much going on, so I'm not going to get overly excited one way or the other. And it's still, there's a little bit of defying gravity, I think, on some of this stuff as far as, we just kind of keep winding up. But I think the last earnings cycle, the reality was there was earnings growth. So there's earnings growth. Stocks are going to go up. It's just what kind of multiple they put on it. And, obviously sometimes that just goes, the growth goes away at some part of the cycle. But I will say now, here's one just as kind of an oddball aside. How about, so in the old days, remember, so this was back, when, you needed positive interest rates or, not negative interest rates, and the world was a little bit more, a little bit different. How about Tesla selling stock and selling debt, and the stock goes up? Is that still, is that a little shocking to you, just out of curiosity?
Yeah, that one made my head scratch a little bit. I guess just everyone is anticipating that, I guess they're just going to sell a lot more cars. That's the only thing I can come up with from that.
I mean, they're diluted, and I guess that the fact that they're issuing stock and all of that is going to make the franchise worth more. But I had to say, I was taken aback by that one a little bit. It's like nothing can stop the juggernaut. Is at all-time, I think it's very close to all-time highs. And, there was the Twitter fantastic talk with Australia, and they have all kinds of power blackouts because they have trouble storing batteries. And Elon Musk, who might be the greatest salesman in the world, whether you like the cars or don't, whatever, but the guy is a pretty good salesman. He's, he tweets out to the PM of some huge state in Australia and says, I could solve your blackout problem, and no problem. Let me install some batteries. So I think that's the kind of stuff that keeps the faithful in that stock. But you never know. Maybe the world will run out of that gigafactory in wherever it is, Nevada or California, and one day they are going to be worth the massive market cap the market's giving them right now. But anyway, I thought that was kind of the standout move today. I'm like, oh my gosh, and it's not unusual for the underwriters of an offering like that to kind of keep the stock supported in the short term, because that makes people that just bought the stock happy. They feel like they don't get taken in the hoop. So we'll see how long it lasts. But, somehow within 6 months, Musk managed to buy back Solar City and raise money by selling more stock and more debt. And his stock price is at an all-time high. Now, I don't know what the definition of a good salesperson is, but I would say that's got to be right up there.
Tom Sosnoff, eat your heart out.
Because that's pretty awesome when you think about it. So anyway, I think that will close out our exciting. The only scintillating is scintillating the right word for the trading block today, Mike?
I would say so. Yeah.
Yeah. Okay. We'll give ourselves a scintillating, and with that, we'll move right on into to the strange part of the show, the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is where usually I or Mr. Longo. You know what? I wonder if he actually puts on the hat in the radio studio. We might have to ask Gene about that. Does he actually put on the Sherlock Holmes hat while he's doing the Odd Block? That would make quite a picture.
I've been to the studio. I've never seen him do it.
Never seen him put a hat on? If he actually had a hat collection right next to, right, like he had just a stack of hats. He had the Viceroy hat, and he would have the Odd Block hat, and then they have a smoking jacket. I think the props would really help the show, but nobody would see it. But I think it might help the show. Anyway, that's just me.
Help the authenticity.
To help the authenticity. So, anyway, the Odd Block. What do we do? The Odd Block. We look at usually large paper, blocks of trades, concentrations, and strikes. And it's something I kind of look at every day because I'm always looking for something to do if I don't have anything to do, or even if I do have something to do. And normally what I like is I like to see volume that moves the needle somehow, moves the volatility needle somehow, or it's a lot of volume when either maybe strike close or optimally strike opening. So today we have a couple of candidates for all this. On a slow day, you don't see much, but a surprise one was GoPro. And I know, Mike, that when you're at RCM and you're working and you're trading, you have your GoPro camera on your helmet, so you could photograph your trading screen, so then everybody can actually see what you do all day long. Would that be a use for a GoPro camera for you?
Possibly, but we got a nice imitation one at Walmart that we use for my son on vacation. That works just as good. But
don't really?
Yeah, like $65. The thing's awesome.
No wonder why GoPro is not $60 anymore. Wasn't that like a $65 or $70 stock, as I recall, when it was just getting squeezed to death? Well, now it's not.
They have phenomenal imitation GoPros at Walmart. I will say that.
Wow. Well, GoPro today was up $1.05 for $65. Oh my gosh. Well, in that case, anyway, I think this person might be unhappy. But so GoPro was up $1.05 today. They had earnings which were okay, I believe, not long ago, but not huge. It is really close to the bottom of the 52-week range at 840. Volume I did see was 1,000 GoPro April 21. Those are the serial cycle 8 calls for 75 cents. It looks like paper bought them, and they were buying the strike up pretty aggressively. Now, there was open interest of 2,000 contracts, but by the end of the day, they're actually down slightly on the options. So whatever action maybe they had or they hope for, whatever action they hope for on the strike has not quite materialized yet. So anyway, it was a buyer calls, quite possibly closing the strike. Maybe they thought it was all over for April, but they closed even on them at this point. It just the market shifted a little bit in the last part of the day. But there was a buyer of those calls, so maybe the person that bought those calls did not get the memo that Walmart is selling a $65 version of that camera. So I you know what?
It's really good. I mean, my son swam with sharks in Hawaii, and it was, we got some phenomenal pictures from that thing.
Oh, really? And it's waterproof and everything? It sticks to his forehead?
The thing's awesome.
Oh, well, that's, well, geez Louise. Anyway, does it connect to the internet? Or it just has a chip?
I don't know that yet. I'm not that tech savvy. I know we download the pictures.
What's the new GoPros are $450 or something like that. So I don't know. That's like almost 10 to 1.
Yeah.
So we'll see. All right. Now after we've done our Walmart and GoPro advertising campaign here on the Odd Block, we will look at HL. So this is Hecla Mining. It is a gold mining stock of all things. Surprise, surprise. Today it was down. Last time I looked at it was down a penny to $5.07. It's about near the middle of the 52-week range. Gold miners, they had that big run in 2016, only to be kind of schmacked about halfway or 3/4 of the way through the year. Today, though, I had a trader. It looked like they were buying the March expiring tomorrow 5 calls over the April 5.5 calls. Net, the spread traded for nickel. The way it priced out looked like they were trying to close their March 5s. I think the little rally was a bit of a surprise. And then they were selling the April 5.5s. Now, net, the spread was trading for a nickel. So I know when Longo's here, when, of course, he's not in Florida, he's not talking to the industry elite and sipping free, fantastic cocktails on the FIA. He would be here saying, wow, this customer is only getting a nickel to roll calls. That's not a whole lot of money for a call roll, don't you think?
No.
For a nickel.
Yeah, I don't understand why that would be the case. That must be big money's not always the smart money, as I've heard at least once on this segment before.
Yeah, because I said it was almost 5,000 contracts rolled. And I try as I might, I tried to make a case where they were selling the March 5s to buy the April 5s. I just did not see it priced that way. So generally when I say stuff like that, it's because, liquidity providers, the markets are kind of a certain way, meaning, they like to buy on their bid and sell on their offer. And it did not look like that. It looked like there was kind of a close on the Marches and a sell on the 5. So, I mean, either way, either they're paying a nickel for the March 5 or the April 5s, which I just don't see how it prices like that. But just looking at the theoretical value of the options. But anyway, it looks like a roll for a nickel. And I guess a nickel's a nickel. After commissions, you make
4 pennies.
You just don't make very much. Anyway, and the last trade of the day. This is actually a stock that we looked at in our chat room today, in the Option Pit chat room a little bit, or at least a couple days ago, is Momo. What is this company? It's a Chinese company. It's a social networking platform. Now, I talked to some guys in the chat room. It's kind of like the Chinese Tinder. It's kind of a social hookup network site, something like that for China, which obviously that could be a large potential market for something like that. But anyway, just the name is kind of it's not. It kind of doesn't quite describe maybe what the company totally does. But anyway, Momo is the name of the ticker. Of course, Longo would like that because the name of the company and the ticker is the same thing. The stock is up $1 to $34.95 today. The recent movement, it's pretty impressive. I think it's up $5 or $6 in just a couple days. It was last trading. It was trading $29 on Friday. So the stock has actually made quite a move. And in this case, the block that I looked at, there was 400 of the April 40 calls traded 95. So basically from the opening today, there are buyers of the April 40 calls, small lots, 1s, 2s, 5s, 8s, 10s, stuff like that. And then a block traded 95. A block of 400 traded 95 cents. So net about 1,000 calls on the strike traded. It just looked like straight bullish paper. And it looks like people are betting on the future that this kind of social networking hookup thing could, has a market in China. I hear they've got there's a few people in China, a couple 100,000, couple million, billion and a half. I don't know. It could be the app of all apps in China, maybe.
You never know. The only thing I would add to that is maybe these people should have traded Altria instead, because it would be half the work. You only have to enter half the ticker symbol. Any true stock or option trading geek will think that's funny anyway.
I thought it was kind of funny. I was thinking of Mo.
Oh, yeah.
Anyway, so after that, after the option ticker geek joke, we're going to close the odd block and move into the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the strategy block.
Hello, everybody. This is Andrew Giovinazzi again. Filling in for Mark Longo on the strategy block. Now, normally Mike would do the strategy block, but he's a little infirm. He's not feeling super good. But I'm going to give it a whirl. And I thought that the strategy today would be just simply on closing trades. So every once in a while, even me as a trader, we get a little lazy sometimes, and you start to look at your P&L and things are going good, and you think, oh, everything's just going to keep going in this direction and everything will be hunky-dory. However, what I just remind everybody is that options, especially options of shorter duration, they have finite lifespans. So, one thing I try to, coach option pick clients is, options are not really a marriage. They're more like a date, where you have a position, you like the position works for you, but then you pull up the risk chart of the position. So it's a fly or an iron condor or something. Let's say if you're a premium seller and you look at it, you're like, wow, I made, let's say $100. But if I hold this trade to the very, very, very last day, I'm going to make $500. So you know what I'm going to do? I'm going to continue to hold this trade even though I've made some pretty decent money on it. And I bet I'm going to make the entire amount of cash. So what I would say there is, you can put a trade into a trade platform, and almost any decent trading platform will give you a P&L and a expected dollar move on the trade, and there will be a peak somewhere of how much you can make or lose. But usually if you're short contracts, you think, well, it's going to close at the short strike and I'm going to make tons of money. What I would say is that is, it's kind of like William Tell shooting an apple off of somebody's head. Yes, William Tell did it, but that doesn't necessarily mean that you can do it. Anybody can put a trade into a trade platform and get a max P&L. That doesn't mean you actually deserve those dollars. So what I would say is, especially in conditions like we have where the market's kind of just sort of beating around but not really going anywhere, it's kind of sliding up. If you have trades that have worked out, especially selling premium and when the vol's low, you take that as a good thing. You take your sale, you're pretty close to a closing price, and then you just close the position and move on to something else. And just because your P&L says it's going to make you a lot of money doesn't necessarily mean that it will. I don't know, Mike, if you have, I know you're kind of infirm, but do you have anything to add to that?
Yeah, I'll just say this. In how many options have you traded in your career? I think you've said it before.
5 or 6 million, maybe something like that.
How many times and how many years have you traded options?
Let's see, 26.
How many times have you seen a butterfly or a straddle pinned?
Maybe 4.
Expiration.
4.
That's honestly probably 2 to 3 more than I would have guessed, and I think that says it all.
I think 4 is a lot, though. I'd have to strain to remember them, but there's a couple really, really happy ones there.
Yeah, it doesn't happen often, folks. I mean, you got to really pick your battles, and then trying to squeeze the last penny out of something is a losing battle. I would say 99% of the time, but of the 5 to 6 million contracts that Andrew's traded, it's a losing battle all but 4 of the 5 to 6 million times.
So you can take that as your statistics. And then some people write back, "Oh, no, I've had stuff pin all the time." I go, well, good for you. It hasn't worked for me.
I've never seen it happen.
Yeah, it is definitely difficult. But I think that's especially with people that are new, it is a you look at, you're looking at the screen and you think that's just, you're kind of on somehow once you have a position on, you think the market owes you that. And it just really doesn't. Things can move around and happen much quicker than you would think. Now I think so. Anyway, thank you, Mike, for the strategy block. Anyway, that's just a hint. As vol gets lower and the market kind of grinds, kind of up a little bit, but the vol grinds lower. Just be much more cognizant about getting those positions closed. Taking when I was young, one of the partners in the firm that I started with, he had a great line. He's like, if you're trading options, you're more like kind of a thief. You're running in there, you're grabbing the Rolex watch off the table and leaving. You're kind of a hit and run. You're not in there, well, I'm going to take the TV off the wall, I'm going to have dinner, and then I'm going to steal the silverware. You're not there to hang out forever and then leave at a leisurely pace. Selling option premium is, I think, much more of a you have to be kind of strategic, and when you have your shot to close, you close, and then you move on. So
I would agree with that one wholeheartedly. And
with that, I think we will, on that larcenous note, we will close the strategy block. Totally different when I do it, I guess. And then we'll move on to, I guess that's everybody's favorite block, the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
Okay, everyone, well, welcome to the Mail Block. This is where you get to ask the questions, and we try to come up with some answers. So I would just say, even though I know, Mike, it's hard for you to talk, I'll just say, well, you can just nod your head, but of course I can't see that. Is we have a question of the week, right? We have, if you had to buy volatility, which is the best value? So which, in this case, right, which one won as the best value? You can buy VIX at 1150. You can buy Snap IV at 56%. You can buy Apple IV at 14, Apple 30 IV, or you can buy the OIV, which is the oil volatility, at 33. Gun to your head, which would be the best value?
I'm going to go with VIX at 1150.
VIX at 1150. That is the overwhelming winner. Oh my gosh. So far, 35% of all respondents said VIX at 1150. And I think today, actually, did we trade 1150? Yeah, 1121. So there you go. Number 2, surprisingly, OIV for 33% so far. Apple for 14% for 30-day implied volatility. iPhone vol. Actually, that was the lowest on the list, only 19%. So there's not a lot of Apple love out there. I guess you know what there is? There's no love for buying options in Apple. We were just looking at that today. And I can tell you, yes, the Apple, you could buy the 145 calls in Apple for 1385 or 1365 volatility, which is about the lowest I've seen 30-day vol in Apple. So it is darn cheap, just like all the vol is in Apple, I would say. But I guess what's weird is we're talking about vol at that level. By the way, I love this Tween vol. Tween vol is 56%. And what's funny is I think the snap vol keeps going down as well. So no matter what, no matter what the vol is, it is finding a way to decline today. Yes, snap vol is actually in the 40s on some strikes. The April volatility is already to 48. So a day when SPX is down and the VIX is down, and volatility everywhere is down. Everything is just down, down, down when it comes to vol. A very interesting question. I wonder just how low all that will go. But it's certainly not going up. All right, so here is another question. The handle is NanFran. Tomorrow is triple witching hour. What does that mean for options? Mike, if you want, you can answer it, or I can answer it, or you could just say, I will take a pass on that because blank.
I will take a pass on that because triple witching, it's really not as big of a deal as it used to be, but I'm going to rely on some of your old. I'm willing to bet you have some type of market story about triple witching back when it actually meant something.
It used to mean something, but I think the biggest problem used to be just trying to roll index positions. And now with weeklies and the fact that, most of the index stuff is already rolled off, a couple of weeks ago, so they get out of the forward roll. It's not near what it used to be. So triple witching just means the futures and options, because it's a quarterly expiration on the big index products and index futures. Everything's just expiring this week. And now everybody just kind of gets out of everything. So there are stories of people just random on expiration forgetting to exercise things, which had caused great pain and discomfort to certain traders. But other than that, I wish I had like a great triple witching story. To be honest, it put it this way, in real trading, it has never been as big as CNBC makes it out to be. It sounds great though. Triple witching sounds, there's going to be all kinds of action, and then the guys on the floor and they're waiting for something to happen, and then it doesn't sound as good as you say, well, everybody rolled last week or 2 weeks ago, or they've been leaving their positions. So
6 million option contracts, 4 pinned straddles, but no triple witching stories. Oh my gosh.
I know. I kind of let you down a little bit. I thought that was something that just juiced the show.
You did. I thought it would. I mean, I figured since I've only been around like maybe 12, 15 years or so. I mean, triple witching's never really meant that much to me, but I guess it never really meant anything to a veteran such as yourself either.
No, I mean, there's the two best expiration stories are one in the OEX when they just when the OEX was the biggest index product, and since it was American Exercise, there would be, deep in the money assignments, which would screw everybody up because it would mess all their spreads up, because half the spread would disappear. So if you imagine, in the old days, if you have it in the money call spread, let's say, and your short side got assigned, so all of a sudden you no longer have a short contract. It gets assigned for cash, and that just leaves you net long the next day, and then the market opens down and you get hosed. So that's not necessarily a triple witching story. That's just an assignment getting hosed story. The only other one I can think of, well, at least for me, is I've got assigned out of the money puts before on a Friday, actually on a Saturday, which can happen. on a stock. Let's see, the stock closed at $17 on Friday. They had bad news, and the news didn't come out until Saturday, and the stock opened $4 on a Monday, and I got assigned some 12 puts. So you can see how much fun that was. I didn't get assigned a ton of them, but it was enough to make it a kind of a stinky Monday.
That sucks.
So, and if somebody says, oh, you don't have to close those short contracts, the only way to guarantee you will not be assigned a contract is to close it. So you can still be assigned even though you think that the options are out of the money, or they can close out of the money, but you still can be assigned. So
I actually love it when I have long options. Like, let's say I'm closing out a vertical, and maybe like the long leg of a vertical is at 0 by a penny or something like that. So I'm just going to leave it to avoid the commission charge. And then all of a sudden the underlying just totally moves the opposite way, and that 1 penny option becomes like a $5 option. And that's happened to me twice. And I think I talked about it on the show once. And those are fun Mondays when you have something like that happen.
It is. Yes, I've had some what I just call legacy positions where the options were dormant and then they're not, which is kind of nice. And there's one more question. I think we have time for one more question. What's the difference between weekly and standard options? Well, not much. I guess I'll save your voice, Mike. I'll answer this for Goose. Not much. Weekly options. I think the biggest difference is, weekly options will close and settle on the Friday. Standard options, serial options, still, I think, officially expire on the Saturday. I think that's one of the differences. Also, too, serial options for the index, they could have a AM settlement, which means they stop trading on Thursday, but they settle on Friday morning. So the biggest difference, I think, for standard and weekly option would be in the index products, because the settlement can be different. So that's one thing you should be aware of, especially on the SPX. I don't know if you have anything to add to that, Mike, or not.
I believe you've said it all.
Well, in that case, if I've said it all, we will go from the mail block to the Around the Block segment.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. This is the Around the Block, where we just what's on our radar screen for the rest of the week. And I think even Monday we had some exciting stuff for the week. But this week, I think most of the exciting stuff has happened. But Mike, if you could pull yourself out of your flu, what do you have for us possibly for the Friday going into what most likely is a very quiet weekend?
Well, I think what needs to happen now is Dow 21,000, S&P 2,400. I think those are key numbers. And I don't know if it's necessarily going to – I don't think it's going to happen tomorrow, but it could. You never know. And then the other one, of course, NASDAQ 6,000. I think those are all big psychological barriers. And it might take a while to get through them, but when we have closes of all three of them above there – for more than one day, I think I might say my saying again. I don't know yet, though. I have to think about it.
And hold on. What? Oh, I guess you know what? I'm not even going to ask you what that saying is, because we have to wait. I'm gonna make the listeners wait for those famous words.
Oh, I love it.
But yes, I think for the most part, okay, we've got rates are going up. Things seem to be normal. Washington is still, I don't think the food fight has quite ended there. It kind of reminds me of the scrum in Animal House, when John Belushi jumps up and says food fight, and then everything kind of goes crazy. So, we'll see how that goes. There could be a potential litmus test see if there could be something done on healthcare reform, if the government can do good stuff. Anything, I think, that adds kind of clarity and sort of forward confidence type of look, they get the healthcare thing done, maybe they get some tax stuff done, and then that makes people a little more bullish because, the future, very similar to kind of how the 90s progressed and sort of in the mid 2000s before the housing crisis stuff. You need, generally bull markets need a kind of, or what they think anyway, is kind of a clear future. So as far as around the block or looking, stuff on my radar, that's sort of like a midterm look to see if anything actually comes out of all that. Don't know if it will, but that could be another potential thing to get us up and over 2,400 and get those animal spirits going in the stock market. And with that, for Mr. Tucson, I forgot. Do you have anything going on at RCM?
We're still doing taking the Pepsi challenge. Give me a call if you are looking to see if we can save you some money on commissions. We have 3 brokers that we work with, Interactive Brokers, TD Ameritrade, as well as MoneyBlock. If you're interested in seeing if we can help you in any way and provide a little bit of advice for you along the way, give me a call. We can give it a shot. I'm at 312-212-3531, or shoot me an email at mtosaw@rcmfs.com. And hopefully I'll be feeling better tomorrow to field all those phone calls, which I will.
Well, that's good. So you get some rest this evening, Mr. Tucson. We at Option Pit, we're just wrapping up our one master class on volatility, or the vol products, which I think went pretty good. We will be doing another one on premium selling. Hopefully there will be some premium to sell. Probably starting around April, May. You'll start to see that from us. And our next Saturday class as well. We still haven't quite decided on what it is. Although the last one on butterflies went pretty good. And with that, for Mr. Tucson, for the Option Insider Radio Conglomerate, global conglomerate, and it is I, Andrew Giovinazzi, guest hosting for the show, wishing Mr. Longo a happy time in Florida, and we will see you all next week right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.